The loss is largely attributed to write-offs and write-downs for some of your PNG operations, some of it also down to the lower oil and LNG price out there as well. Walk us through the numbers. What were the positives for you, and what was the bit that you'd rather forget about?
Rishi, that's a good question. You know, our numbers and our performance last year operationally was actually very strong. If you look at the performance in terms of our financial performance, we're really hit by the commodity price downturn in terms of oil. And a lot of our impairments were in actual fact as a result of a refocus of the company on delivery of our resources, our 2C resources, rather than pursuing future exploration. So the underlying performance of the company was very strong. Our safety performance was good. Our costs, we were able to get our cost base down by about $2.50 a barrel, and we took these costs out of the business sustainably. They weren't just taken out very quickly. So across the board, Oil Search has really been preparing itself for the future and building its resilience to lower oil price.
But Keiran, what's the bit you don't want to remember about the year that went?
Look, I think this was my first year after taking after from a 25-year veteran, and I think I probably made more decisions in the last year than I've done in the last 100, or if I'm not 100. But anyway, importantly, there's not much that I don't want to remember from last year. For us, it was a year where we really have set the company up. I think the biggest challenge that we had was actually managing COVID and preparing our staff for an extended period away from their families. And that was the thing that really focused my attention, to ensure that our staff were able to manage through a period of additional stress, as well as the market going down around them.
Keiran, I just want to move to the future now, and Alaska certainly is there, and it perhaps relieves you of being so dependent on Papua New Guinea, PNG. Tell us a little bit about the project and what you hope to gain from it, and tell us about how it perhaps might help you diversify from PNG.
Look, we've got a great set of assets in PNG, and for us, we weren't looking to diversify from PNG per se, but we identified a quality asset in Alaska that we felt we could add serious value to. So when we bought that asset, we bought the estimated reserves on the basis of our acquisition were 500 million barrels, and we've now had certified reserves in that same field of 964 million barrels, with some significant upside in those areas. So for us, our acquisition of that back in 2018 was validated on the basis of seeing additional potential. Importantly, it's on state land, it's not on federal land, and it's an area that's is straddled by existing infrastructure. So we also saw it as an area that had not only potential for growth, but being able to use existing infrastructure to develop. And so we're very excited by what we're seeing in Alaska. We announced that we're going into FEED with our partner Repsol yesterday, and with a view for making the final investment decision on that project at the end of this year. Importantly, what we did was to reduce the capex by half, and we're doing that through a phased development where, rather than going to a full field development initially, we're starting off with 80,000 barrels a day, phase one, and that cash flow from that initial phase one will be able to support future expansion. So it's a very exciting project. It's very large. It's very important for the state of Alaska.
It is a major growth investment. How much of a game changer is it?
Look, going forward, 70% of our revenue and our interest will still be driven by Papua New Guinea, and our world-class LNG projects there. But what it does, it gives us that diversity for putting some oil. But importantly, our project there is aligned with Paris agreements in terms of targeting a low emission intensity project. And so it's an important project. It also demonstrates Oil Search's capability of operating not just in PNG, but also in Alaska as well. But it's a relatively lower cost project in terms of where it sits on the cost curve. So again, it's a very resilient project going forward.
You're selling a 15% stake in the project to fund 50% of it. Give us a sense of where interest is coming from, and might you have to sell more, a bigger stake for it?
No, fortunately, one of the things that has happened this year is by getting the capital costs, halving the capital costs, our actual cash exposure to the project going forward on the basis that we project finance 50% is actually quite modest. So, for us, it's about having an optimum equity level for a project that size. We don't need 51% of a huge project. It's something that we can offset, and our partners at our joint venture partners has agreed to divest some to a quality partner. So for us, it's a nice to have. It's not an absolute must have, but we really are targeting a 36% interest in this project long term, and that's an ideal equity for Oil Search.
Keiran, we can't speak to an oil man without asking for his prediction for oil prices. Goldman's saying we could see oil at $75 a barrel. What are you anticipating?
Look, to give Goldman their credit, they were one of the only companies that were predicting high oil prices early in 2021. Most of the pundits were still predicting oil prices in the 40s. Look, I think the reality is that there is likely the beginnings of a commodity super cycle, starting to develop. But that is fragile depending on what happens with the COVID vaccine rollout. So we are still managing our business conservatively. But I would have to suggest that on the basis of the complete lack of capital investment that's occurred over the last year and in fact, really the last few years, there's not the investment that all companies are making or energy companies are making to replace production. So in those circumstances, your risk is on the upside rather than the downside. So we probably see the strength in the oil market continuing, but we're certainly not planning for it, not until we see a clear pathway in the post-COVID vaccine rollout.
Keiran, you slashed your dividend to what, half a US cent per share, down from 4.5 US cents a year before. What plans do you have to actually get it back up to the levels that you had previously, and what's it going to take?
Look, it's frankly oil price. Oil Search is probably one of the companies that's most leveraged to oil price, both on the downside and the upside. So when the oil price collapsed last year, we actually were affected more, obviously because of our oil-linked LNG contracts and our oil production. So, and we were completely unhedged. So, for us, what we've done today is to also implement 9 million barrels of puts in the market with a $55 floor price. So we're actually protecting the downside. So really, our ability to pay a profit is a function of our ability to have a core underlying net PAT, and that's very much orientated around oil price. So we're confident that our dividends will return to the pre-COVID levels.